Australian-listed medical technology and telehealth company CardieX has just announced an agreement to acquire a majority interest in inHealth Medical, a leading provider of health coaching and telehealth services in the United States. CardieX CEO and Managing Director Craig Cooper joins us today to give an overview of that transaction. Yeah, Craig, over the last 6 months, management has undertaken select due diligence on the most promising opportunities in the consumer health sector. Why did inHealth stand apart from the others?
Peter, we signaled to the market last year, as well as at our annual general meeting, and consistently throughout the year, that we were looking for an opportunity in digital and consumer health. So, we had been undertaking, a significant amount of due diligence across the sector over the last, 8 to 12 months, and seriously looking at companies within this space over the last 6 months. So we had about 6 companies that we had under due diligence of sort of varying degrees of stages and valuations, and everything from pure startups. We also looked organically internally as to what that would take for us to build the company within our existing structure and staff. But we took the view at the end of the day that we needed to find, firstly, a team with expertise in the sector. Secondly, a company that had an existing platform, and thirdly, one that gave us access not only to a broader ecosystem of healthcare partners, but also one that we could fully leverage our existing assets within the CardieX group as part of that transaction. So about 4 months ago, we came across inHealth Medical. I'm based here in Newport Beach, California. I'm here not because the sun shines all year, but because of the fact that we're basically in the middle of the sort of med tech corridor between sort of Los Angeles and San Diego, which is really the hub of the med tech sector for California. And, effectively through my network, we came across this opportunity. They had just announced a number of clinical trials in relation to some of their existing programs and services. And, we got in touch with them, and basically we were at a point where they were getting ready to go to market in order to raise capital. They didn't have an investment deck ready. They were halfway through developing it. They were doing so off the back of a number of significant contracts, which I'll talk about in a minute. So we really got in there early with this business and convinced them of the value opportunity to partner with us and for us to fund effectively what we see as a significant growth opportunity for the company. So that was really the legacy of how we got involved with this business. And, we feel it's going to be a transformational business for CardieX, that it's going to be materially significant from an operational as well as a financial perspective going forward. And we're super excited about the opportunity we have with this very experienced team to basically help them build out their journey into a significant company.
Thanks, Craig. It sounds like you did come across at an opportune time. Can you tell shareholders more about the material financial benefits and the expected revenue impact you expect to see for CardieX as a result of the inHealth transaction?
Sure, absolutely. Look, we're not giving forecasts at the moment, but I can talk generally about how we feel about the transaction internally and some of our sort of broad internal modeling. But if anyone's read our press release, they would know that we're basically entering into a transaction. Well, effectively, we've signed a transaction with inHealth Medical Services, which will allow us to acquire up to 50.5% of the business. So effective operating and financial control of the business. There are terms set out in the press release around some of the technical terms of the convertible note, and I'll draw the attention of anyone listening to that press release if they're interested in more details. But the broad structure of the deal is that we're investing in 3 phases. Firstly, there's a $250,000 investment, which we have already paid out of cash reserves. Secondly, there's a $3 million investment, which is due by 30th of January next year, 2019. And then thirdly, there's an additional 10% component, which really is activated around June of 2020, which we can do in one of two structures. Either we can buy equity directly from the founders, or we can actually issue new capital and increase our shareholding to 50.5% on that basis. I mean, it's important to us to get to over 50% because at that point we can then financially consolidate, and a number of other, obvious, financial and operational benefits will accrue to us. But between now and then, we're going to book the business as a financial asset of CardieX. We'll make a decision over the next 18 months as to how quickly we actually exercise our rights to convert under the note into common equity. And that will be principally driven, Peter, by whether the company ultimately needs more capital or not in June 2020. But the way we're modeling it, and it's important to point out that if we execute to our plan and meet 70% of our internal forecasts with inHealth, then this will be a bigger revenue business than the current Accor Medical is today by this time next year, and it'll be profitable. And when we look forward to 2020, the potential is for this business to be 2 times the size of our Accor Medical business as it sits today, and substantially EBITDA profitable. So we see it as a significant financial contributor to the operations of the CardieX group. And I mean, when you really drill down on the press release in terms of the minutiae of what the opportunity is, I think that's an important point to point out. I mean, look, the elephant in the room here, obviously, as a result of that statement, is how are we going to fund all this, right? That's really, the question that's on the lips of sort of most of the people that sort of we're talking about. And we're talking to, I should say. Look, like any business, be it us or Amazon or Tesla for that matter, we need capital to grow and to create scale. And, we're a growth company. We're not going to do it by just growing organically at this point. We need to fund our growth in order to become a significant company. And look, Peter, I didn't join CardieX to run a small business. I would rather shareholders focus on the growth that we have and the opportunity, and particularly the financial opportunity we have with this transaction, rather than worrying about the fact that we're actually going to have to raise more capital. I mean, that's just a natural, fundamental process that we're going through as a growth company. So we want to make sure that, we're very clear about the financial opportunity that we have with this business, particularly given the contribution that it can make to the overall financial assets of the CardieX group itself. Now, when we look at the price of a raise, in the event that we raise capital for the next 2 tranches of this business, look, I want to be very clear. The assumption will be in the Australian market that it's probably going to be at a discount to the stock price today. And I want to make it very, very clear that in our minds, that couldn't be further from the truth. I mean, we see this deal commanding a significant premium in the market, given the nature of the financial structure we've put in place, the operational benefits that it's going to bring to the CardieX group, and the overall contribution this is going to make to the business, as I pointed out before, based on what our internal forecasts are. So, I think that's important to point out. And also the fact that, look, at the end of the day, Peter, we're the largest shareholders in this business. Through C2 Ventures, which is the investment entity of Neil Cairns and myself, my fellow director on the board, we're the largest shareholders. So we're massively incentivized in order to optimize the shareholder value in this opportunity. So we've already made it clear to the market yesterday in the press release that we're going to be taking our pro rata in terms of any funding that's required going forward for growth, because we look at everything we're doing as maximizing not only our broader shareholder value, but our shareholder value as well. And that's fundamental for us in terms of any transaction that we're doing.
Craig, I think it's excellent for shareholders to see skin in the game from directors and such a positive and growth outlook that you and your team have applied here. So I'm sure that shareholders will be well aligned with your vision and that strategy, and we'll be looking forward to that. I think for those who are not so familiar with the market opportunity, in terms of the movement towards digital and the growth outlook for telehealth, where do you see the current state of the environment, and how do you see CardieX positioning itself to take advantage of that environment?
Look, I think broadly, the telehealth market is significant and growing at a compound rate of about 18% a year. We're already seeing upwards of 90% of hospitals in the USA already committed to implementing in-hospital telehealth practices. We're seeing a massive demographic move towards digital health, just as a result of shifting populations, aging populations who can't travel to doctors or who don't have relationships with their primary physician, millennials who are not comfortable in general practice environments and don't have time and are quite frankly, annoyed at the 8 minutes that they're allocated by general practitioners in the United States health framework. I mean, there's a number of demographic shifts which are happening, as well as ease of convenience, growth of wearables, and the interaction and availability of on-demand health services. So, I mean, for us, our vision is to build the largest telehealth company globally. It's a multi-billion-dollar industry, and we want to lead that. We have the platform in place to do that. And through this transaction, we've got access to some of the most significant healthcare providers and companies in the US, which can partner with us to do this. I mean, ultimately, what the company does, it provides digital and online communications platform and clinically based programs in order to drive better health outcomes. And that's the key value opportunity, be it for insurers, be it for practitioners who want to offload their practice management to digital communications and digital consultations, corporate health program providers. All of these opportunities coalesce around these new technologies and new means of delivering healthcare services. So for us, the opportunity with inHealth is really a stamp and footprint in the future of digital medicine. And that's the key vision that's driving our investment in this business.
Yeah, that is the modern technology is rolling pretty quickly, and medicine is one of the industries that's going to roll with that. So that's all pretty encouraging and fairly reflective news. So with this deal being bedded down, how will the two companies work together, and where do you see the first focus areas for your joint operation?
Well, look, I think I'll answer that in two ways. Firstly is that when I first looked at this deal, I was struggling to find what was wrong with it, Peter. Because, wherever I looked, I was looking for problems and, not finding them. And, every rock I sort of overturned, gave us more opportunity. And this was, even to the extent of due diligence calls that I personally have with, Amwell, the largest telemedicine provider in the US, or Anthem, which is the number 2 healthcare insurance company in the US, $74 billion business here in the US, which are key contractual partners of inHealth. I was looking for issues in the deal. And quite frankly, I've gotten to the point now where I only see upside in this opportunity. I mean, for us, as far as our strategic integration with this business, let me just step back one moment and just talk about the business model. And then I think that'll give you an idea of sort of where we can sort of strategically fit in with the business. I mean, Peter, we make money about 5 ways with inHealth. Directly with insurers, whereby individuals and corporations pay insurers such as Anthem, and Anthem pays us in terms of when a connection is made to one of our platforms or programs or a consultation is undertaken. Telemedicine platforms like Amwell, again, paid by corporations or individuals. Amwell pays us, again, when a connection is made for a health program, coaching, or any other diagnostic. We sell direct to practitioners. So doctors who want to have their own platforms for undertaking telemedicine, which backdoors and dovetails into the new CPT codes in the US, which allow reimbursement up to $90 a month for practitioners who provide remote patient monitoring. That's significant to point out. Corporate health programs, so companies like Samsung, Philips, large pharmaceutical companies who run their own corporate health programs, pay us directly when someone makes a connection through their corporate program. And then direct programs. So to the extent that, we create, hypertension management programs or sleep programs. I mean, the business model with Anthem is basically a modular health platform which Anthem has. Anthem has about 4 or 5 different health programs across, diabetes, smoking, weight loss, just general metabolic disease. And, we provide currently 2 modules within their population health program. Our discussions with Anthem have been along the lines that basically we want to accelerate that. We want to be your in-house program developer and provider across a multitude of health programs that we can plug into the Anthem network as well as the Amwell network, and then have you sell them out to your 58,000 corporate clients or your 7,000 hospitals or whatever that might be. So the opportunity for us as CardieX from a co-development program, first up is really the low-hanging fruit. So co-developing hypertension and cardiac health programs, which is really our bread and butter. And so none of these large corporate partnerships that we have an existing program in that regard. So that's already in development. We've started that. We started that 3 weeks ago, even before we signed this deal with them. So to the extent that we can start to leverage all our existing asset base in order to develop customized programs for our existing customers within the inHealth network and feed those through those networks, that's where the opportunity is. And I think it's important to point out that from a cash perspective, only 10 to 20% of the capital that's going to be required for this acquisition is actually allocated towards the existing business. So when I talked before about it, meeting its forecast for next year and the size relative to Accor and its profitability at that time, I'm only talking about the existing business modeled on the existing contracts we have in place at the moment, and particularly the contracts with Anthem and with American Well or Amwell. All the new growth opportunities are all accretive to the current model that we've built internally. And the model's effectively being built off the back of the forecasts and the projections that we've been given by these significant institutions. And we effectively, Peter, took 60% of what they gave us and, modeled that out. And, that's how we got to those numbers. So we think there's significant financial upside around this. And then when you look at what we're doing with Blumio, for example, and our wearable strategy, you look at the ecosystem today of what telehealth looks like, it's online and mobile. But our vision for the future and what we're engaging for is that, when you look at the next generation of healthcare companies like Apple, like Amazon, they just announced Alexa health services to run with Alexa, like Alibaba, which has just announced a deal with Allergan, another Orange County company, to launch a online health platform in order to provide online consultations and coaching around cosmetic surgery. So all of these opportunities have one thing missing, and that's the live telehealth coaching that backs into it. So that's the ecosystem that we're building assets around, because ultimately at the end of the day, everything that's happening at the moment in the digital universe around health lacks one component. It lacks the human touch. And when you look at the opportunities, for example, with wearables, too much data, you don't know what to do with it. The next generation of Apple Watches will provide direct access to health coaches through the watch. We want to be that platform. So not only are you getting your EKG, your heart rate variability, whatever that might be, if you've got a problem with hypertension, it's click to talk to a health coach. That's the next phase. And that's what we're positioning ourselves for, as well as the clinical market. They have no time. They've got 8 minutes per patient. Everyone's turning to Dr. Google. So the opportunity for us at that level is to basically provide a supplementary health platform to the existing medical practice in order to, again, drive better patient outcomes. And we're doing this today already. We're getting revenues from it. The company has contracts in place. Before I got in touch with the founders, they were basically walking door to door to medical practices and selling their programs. And these are clinically based programs which they developed and which have been shown in the studies and published to drive medically significant outcomes. And Peter, at the end of the day, that's the one reason we got the Anthem contract, because we had the studies behind us. That's why across all the ecosystem of the US, when they put out an RFP for companies to respond to provide health coaching and telehealth services, that's the one reason we got in there, because far above anyone else who was responding to that RFP, we had the clinical studies to back it up. And that's really where our secret sauce is.
Over coming months, what do you think the pipeline might look like, and what key milestones can shareholders expect from CardieX for the remainder of the year?
Look, I think, we've got two significant transactions on our plate at the moment. One is obviously executing against our wearable strategy with Blumio, and we have news coming to the market shortly around that and the steps that have been taken to date, as well as a more definitive product plan as we move through 2019 and what that is going to look like. And we've had, teams from Australia here in California, in Silicon Valley over the last month, working very closely with the Blumio team in terms of executing against that strategy. And we feel very good about that. So we'll have some news on that shortly. We basically want to get our heads down and working to execute against these opportunities, Peter, because we think they are so significant. We don't want to be distracted by the market in terms of the news flow. We'll make statements when statements are material to the market, but we want to make sure the market is very clear about the path that we're on, what the opportunities are that we're pursuing, and the time frame in terms of executing against that. Now we'll have announcements specifically around the individual transactions that we're working on in terms of new clients and contracts signed and the like. And our pipeline, for example, on inHealth is really quite incredible. So we have about 4 RFPs at the moment from pharmaceutical companies, large consumer electronics companies, large pharmacy operators in the US, which we can't talk about at the moment, but to the extent we execute against just one of those, it's going to be a game changer for the business. So really, for me, it's all about execution, making sure that we're delivering on what we've been telling the market, and making sure we're staying consistent to the vision, but also delivering opportunities like inHealth, which are consistent with what we told the market we were going to do, as well as deals which provide a multiple of value to the existing assets of CardieX, which inHealth does.
Well, thanks, Craig. There's plenty there for shareholders and listeners to absorb today. So thanks for joining us and providing more colour and detail on this inHealth Medical Services acquisition.
Great. Thanks so much, Peter, for your time. I'll see you in Sydney soon.
Okay, thanks, Craig. And if shareholders have any other questions, they can email them in and I'll pass them along for a response from Craig. In the meantime, I thank you all for joining us today.